What's up, guys? Welcome back to DCA. Today, what we're going to do is take a look at the historic return on investment for Cardano based on whether Bitcoin is above or below its 20-week moving average. The reason we're going to use the 20-week moving average as a metric for determining what Cardano's price is doing is because that historically, when Bitcoin is above its 20-week moving average, the market is generally bullish. Conversely, when Bitcoin goes below its 20-week moving average, things in the cryptocurrency asset class typically get ugly, and the price of not only Bitcoin, but all of the other assets typically bleed during that time. And perhaps more importantly, when Bitcoin is below its 20-week moving average, historically we've seen the altcoins get hit much harder than Bitcoin has. Currently, Bitcoin is below its 20-week moving average. It descended below its 20-week moving average 11 days ago. And as we all know, the market has essentially been getting hammered since about November 8th. When we hit this peak, things were looking good. Bitcoin got up to approximately $69,000. Ethereum was approaching $5,000. And from that time, we have done nothing but bleed pretty much across the entire market. Okay. Then 11 days ago, so 11 days ago on December 4th, Bitcoin descended below its 20-week moving average, which has historically been a ominous sign for the market in general. So we're going to look at Cardano today in the historical return on investment for both a short-term investor holding for only 30 days and a long-term investor, someone who held for up to 180 days. Okay, so we're going to look at these different time frames and what type of returns you may have expected given Bitcoin being above or below its 20-week moving average. Okay, guys, so what we're looking at here is the return on investment for someone holding Cardano for only 30 days after Bitcoin goes below its 20-week moving average or above its 20-week moving average. So we're going to look at the time since 2017 when Bitcoin went below its 20-week moving average in February of 2018. All right. And what your return on investment would have been over time. We're going to compare how holding during the bear market and how DCAing during the bear market compares to holding and, how DCAing during the bull market would be. All right. And it's a stark comparison. So if you think that holding during the bear market or DCAing during the bear market is a good strategy, hopefully I can show you a thing or two here that, can help you determine what you want to do going forward. This isn't financial advice. This is just factual information and you can do with it as you please. So when Bitcoin goes below the 20-week moving average, that's indicated by this bar. This is the second bar is if you held for 30 days from that point. Okay. So in other words, if you bought here, this would be your return on investment 30 days later. The blue line simply indicates the break even point. All right. And then, if you're up to two, that means you've made 100% profit during that time. If you're down to zero, you have lost all of your capital. Nothing we're ever looking at has ever gone to zero, so that doesn't matter, but that's how this works. So if you're down to 50, so if this says zero point 0.5, that means that you have lost 50% of your investment. If it's down to, let's say, 0.25, that means you're down about 75%. All right. So a 30-day holder from the time that Bitcoin went below its 20-week moving average would have been down about, so you can see wherever the white line is, it says 0.712. That means you would be down about 29%. So you're down 29%. And the thing I want you to notice is that during the time that Bitcoin is below its 20-week moving average, so from red until green, green is when it gets back above. During that time, you are down investing almost the entire time during the bear market. No matter when you buy, 30 days prior, you're down. The only times you'll be up are these short windows like here. There's a short little window here and a short little window here. Other than that, you are essentially losing by holding for 30 days. And remember, the 30-day holder is doing significantly better than a person who's buying and holding for a significant amount of time. Because if we just quickly look, let's say you buy and hold for about a year, you're down 91% just from the time that Bitcoin got below its 20-week moving average. If you buy and hold for, let's say, a half a year, okay, you're down 70%. So the worst stretch that you could have done during during this bear market phase by holding for only 30 days was about right about here, when you would have been down about 63%. Okay. So holding for 30 days up to this point, you were down about 63%. All right. So that's just the general trend. All right. Then we can see that even during this little recovery phase that we had in 2019, Bitcoin got above its 20-week in March of 2019. And again, you were going to be down most of that time, because that's not how the market works. When things start to recover, Bitcoin goes first, then everything else comes. So you were still down here. Okay. Then we got back below the 20-week. And yet again, most of the time you are losing. You're losing. You have been losing. You've been making losses basically every single month if you're DCAing, all the way, all the way, all the way until about right here. So from July of 2020 is when you could have started making profit on almost any of your investment, dating all the way back to February of 2018. So there was a period where, basically all the way out to here. So what do we have? About 900 days where almost no matter when you bought, you were losing. There would be these short windows where if you bought in a very tiny window 30 days prior, you would be up. But other than that, you were getting wrecked for about 900 days. And significantly wrecked. We're talking down 90% or more if you're a long-term holder, okay? And if you're thinking retrospectively, let's say, oh, that's fine, I'll just hold for years and it will come back. Psychologically, yeah, that may be true. What you're saying may be true. Psychologically, go look at an account that is down 99%. Something that started with $1,000 that's down to $10. And it may very well be true that, sure, if you held this, 39-cent Cardano, if you held it all the way until January of 2021, and from that point it went up 10x, your $1,000, sitting right here was down to $10, right? So that is psychologically extraordinarily difficult to do. And if you can do that, you're one of the very few people that can, or you forgot your password and couldn't sell your Cardano during that time. All right. But the point is, then once we get above this 20-week moving average, then things start to look better. You are up the majority of the time with only short windows where you're down. And it's like we always say, right here is when Bitcoin goes parabolic. If we just pop back over quickly. So September and October, Bitcoin holds the 20-week moving average. Then Bitcoin goes parabolic in January. All right. It goes parabolic in January. And sure enough, that's when Cardano starts to see its massive gains. So you could have been up as much as 300% by holding for only 30 days in January. And this trend now then continues. So we get back below the 20-week, and ever since we've got below the 20-week the first time, even if you include this tiny window where you could have been in profit for basically, there was about a 1 month period where buying Cardano would have been profitable to you. And it was during this part of the bear market, right at the end of it. If you bought during that time, you could have been up as much as 130% or 150% or whatever. But since we've gone below this 20-week in May, it has mostly been a losing proposition to hold Cardano, with only a very short amount of time where it was beneficial to you. So what we're saying is, if you think you're going to outsmart the market, guys, good luck to you, because there's about 80% of the time or more where you're going to be getting absolutely hammered. And if we go over to the longer term time windows, the picture gets even bleaker, trust me. So it becomes extraordinarily difficult to use any sort of dollar cost average approach to profit during a bear market. So if you're someone that isn't prepared to sit and hold for years, then buying when Bitcoin is below its 20-week moving average is simply not a good idea and a losing proposition overall. Okay, guys, so I just want to do this quickly. Let's look at a long-term holder. This is someone who's holding for a half of a year. Okay, this is a half a year holder. And you can see that basically the guy who's holding for a half a year, if you thought the guy holding for, for 30 days was getting wrecked, the guy holding for a half a year, at best during this about a year long stretch here, at best, he's only down 45%. And at worst, he's down about 90%. Okay. And he's down about 90% for not an insignificant amount of time. He's down for about 80%, a good percentage of the time. All right. Then if you're a guy who bought a half a year or, a half a year ago from this little peak that we had, sure, this guy was up about 240% for a short amount of time after Bitcoin got back above its 20-week. But again, you had to buy at the right time. You had to buy exactly a half a year prior to this. And notice there was only about let's see, a 2-month window where if you bought during this 2-month window, a half a year prior, you were up. So you're going for a massive amount of time. You're going a massive amount of time where you're down. And there's a 2-month window, some point, out here. Okay, there's a 2-month window right in here in January and February, where if you bought during that time, you're up. So if you think you're so smart that you're going to time the bear market and you are going to time that 2-month window where altcoins will be up, and you're going to do it right there and you know where it is, fine, go for it. But if you're a sensible human being, you know that you're probably not going to be able to do that, at least not in any meaningful way. Maybe you're DCAing and you're DCAing and all the way down, and you have some of your coins are sitting in profit during this time. But for the vast majority of people, you're going to be down. Okay, so if you bought any time up until basically any time up until right here, so August 1st, 2018, you were down all the way until January of 2021. So you were sitting on a loss for about 3 years. And at times you were sitting on a massive loss. In fact, if we just pick a time here, we'll go 180 days. Okay, so right about here. So there were times where you were sitting on about an 80% loss. Okay. So this is my point, guys. Essentially, during times when we're below this 20-week moving average, unless you are certain that we are going to come back above it and get above it and stay above it, you're going to get hammered by holding altcoins. And this is not unique to Cardano. It is consistent amongst all of the altcoins. I showed you with the 30-day what will happen. I showed you now with the 180-day. Now, if you can buy and hold though, for once we're above this 20-week moving average, then things start to look a little rosier, right? The worst you were doing was up 50%. All right. The worst you were doing. And from the time that we got above, so if we just look out here, so there's 180 days. Even during the worst times, you were up 50%, and typically you were up about 100%. If you only waited and held once we got above the 20-week moving average. And at times you could have been up just by buying during the bull market. Do you know how easy it is to buy coins during the bull market? Literally, the idiots shilling altcoins can buy and and hold during the bull market. The guys wearing bunny hats talking about baby Elon Doge Musk, those guys can make 21x gains during the bull market just by buying and holding. But you have to wait until you're above the 20-week moving average. And we're not right now. In fact, we're below and going below and just trending down. Look at your half a year holder ever since we got below this 20 week right here. Look at what's happened. Your profits are down, 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 and now you're a big loser. All right. So basically, for the first time, a half a year holder in November became a loser. That guy is down now. The guy who's been diligent holding for at least 6 months, or for at least 6 months, he's down now. Okay, for the first time. So because the market has been showing uncertainty ever since we got below this 20 week. And now we're below it again. Not a good sign, my friends. So this is what I try and show on this channel is if you're going to do it, try and do it the right way. Don't try and be the smartest guy in the room, outsmarting everyone during the bear market. I know this is not going to get me subscribers. I don't care. At the end of the day, I'm never going to become, wealthier off of YouTube. It's a hobby. And therefore, I have no incentive to say anything other than the truth. So if you want to start buying right now as we go below the 20 week, good luck to you, my friend. Otherwise, I advise that you at minimum wait until the market starts to turn around or things start to look better, because this loss that we've seen right here, sure, there might be a short-term turnaround, but if you think it's ugly so far, it can get way uglier, I assure you. So that's it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.